Can you hear me clearly?
Yes.
Okay, so I'm starting our today's session now. So here, this candlestick, okay, in the downtrend market, there is a pressure here from the upper side, and this candlestick volume is high at this part by the seller side, 67. Okay, that means it's our power of control here, POC. And next candle exactly got rejected from that area, and then market fall down. Yes, you are right. This is the POC. So I will try to explain about POC little more today. So we have to take a very powerful POC point. So what's the normal POC point and what's the very strong POC point? Today I will explain. Okay, so yes, resistance level, yes, when market below and this POC point little above, so it will act as a SNR or resistance level. So when the next candle came here and got rejected from that point, it reversed down. Yes. Okay. Here in the downtrend market, power of control area 62 volume did not allow next candle to move above the POC area. Okay. Yes, basically it's a downtrend market condition and POC 62 here, and next candlestick got rejected little below, and then it again reversed back to the downward direction. Yes. In the uptrend market, this one, yes, exactly, got rejected from here and then go. So try to understand here, when the market is uptrend, that means buyers are powerful, and this POC point is a very strong point here by the buyer side. And then when this candlestick came here, sellers try to create here a strong body candlestick, but buyers didn't allow. These sellers, they again these sellers got rejected from this POC point and reversed back, and it closed above this POC point. So if anyone want to place their trade exactly at the POC point here to the upper direction, definitely it will give them winning trade. Okay, yes, you are right. So basic knowledge is basic knowledge of POC is clear now. Try to understand. We have to understand some a little advanced knowledge. So that is POC. Suppose it's a thing that it's a level. It's a level of the market. It can only support level or resistance level or SNR level. When SNR level by horizontal line, we have to take this type of area, one line for support, one line for resistance, and middle breakout. That means this type of, if it's a resistance level here, then breakout happen. After breakout, again came back to that area. Okay. So now this is SNR by horizontal line, and this is normal support or resistance level by horizontal line. Okay. So if we want to place any trade, definitely we have to place a trade when market again reverts back to this area. Okay, suppose it not break this level, market just little go up, After that, it again came back to the SNR level here. So we can trust. Just try to understand normally why we can trust. Because this is already SNR level, a strong SNR, SNR level, a strong SNR level, resistance, breakout, support. We already know that this is a strong SNR level. And exactly at that area, what happened? After breakout, market came here, it's a support level, and there was a resistance level here. So buyers failed to break this resistance level. When buyers fail to break this resistance level, that means sellers are stronger at that area. So when sellers are stronger and sellers again started to fall down, now this is a buyer's area. So in between this area, it's trying to create a ranging situation. That means buyers and sellers both are equally powerful. So when buyers came to sellers area, sellers enter. When the sellers came to this buyers area, buyers will again enter. So the scenario is very clear. That time we can easily trust that yes, after came back to this area, we can easily place our trade here to the upward direction like this. But in this case, suppose this is like this type of movement here, this type of movement here, breakout happen. So after breakout, now after breakout, so when we see a market came here and again breakout happened here like this. So when it came to this area, now this is not so confirm area. If we think that market came here and we place our trade above this level here to the downward direction, it's not confirmed because breakout may happen because of this movement. Number one, 50% chance we can take that when market came here, it can break, and 50% chance when market came here, after rejection, it can reverse back like this. But in this delta river, we have to take that type of situations also, this type of situations also, that situation we can trust that yes, after any particular situation or after any particular POC point, we can trust that it's a very, very stronger like this. But it's not confirmed. When market create that type of situation, it's not confirmed. So now if we see this is a candle, and in this candlestick, there are so many volume here, volume may increase here, volume may increase here, volume may increase here. But what's the amount of volume increase when we can take that one as a strong volume? So when market create that type of situation, there are so many volume amount like here 30, here 50, here like 90. So it may by the buyer side or by the seller side also. This one 60. So when we see the volume or POC point more than 75, more than 75 to 100, that is a perfect volume size. This is a volume size, this is a volume size, this is volume size, this is volume size. So this 90 volume size here 90. So this volume size is a very perfect volume size here. So that means we can take this one as a strong POC point, like this type of scenario. So I have given here this example because it's you already know about this situation. What's the strong SNR level, how we can draw, what's the buyers and sellers area. So same thing. If in this candlestick, so this is the point here. $100. So when after this candlestick, when next candlestick came to this area, like this, when hit this area, market got rejected by this POC point and it reversed back like this. And we will get like this type of situation. So always we must follow the trend. Previous trend like this. So after this pullback, market goes up. When first candlestick, this one, and second candlestick when came back to this area. So now this POC point is this one, and another point here, like it's 30. It may buy seller side or buyer side 30, or it may buy here. So more possibility when market came to this point, it will not break this point, and market reverse from this point and goes up. That means when we will get this type of amount more than 75 to 100%, or even more than 100, so then it will act as a very, very strong POC point. And when this candlestick got rejected from this POC point, it reversed back. So we can place an order from here. It will act as a SNR, a strong SNR level. Now it's clear?
Yes.
Which POC point we have to take as a very, very strong POC point. New topics is the exchange effort. Okay, so for best understanding of exchange effort, you have to first of all, you have to understand some basic concepts. That is, suppose this is one candlestick. Okay, suppose think that it's a green candle, it's a bullish candlestick, and this candlestick, in this part there is a volume amount, in this part, this part. Okay, so think that all these volumes are low volume, like 10, 15, 30, 50. Okay, I think that 50 by the seller side, 50. So this is one data, this candlestick volume amount, this 10, 15, 30, 50. So another candlestick here, this one. So in this candlestick volume data here, like 60, 90, here 50. So the main difference between this candlestick and these candlesticks are in this candlestick, all the volume amount are less than 75. So less than 75. But in this candlestick, volume is more than 75, because one volume is 90.
Yes.
So that means what happening in between this candlestick and this candlestick. So in this candlestick, so when buyers and sellers fight in between this area inside of this candlestick, so there are less effort here. But in this candlestick when fight, so between buyers and sellers, so the effort is very high. So where it volume is high, that is totally different thing. We will learn everything, but try to understand first the basic. Basic is when we getting this data, in this data, the power of control here, it's a very high exactly at this point, and POC, power of control area, the volume size, volume amount is 90. That means this area is a strong area, POC
Yes.
area. And there is no that type of situation here. So less than 75. So that means when in these candlesticks, so buyers and sellers fight, this the sellers volume, this the buyers volume, this again buyers volume. So when this candlestick formed, so in this part volume is high, more than 75. So that situation, that type of situation, that type of volume amount help to exchange the effort. So exchange effort, that means suppose think that very normally think that it's a downtrend market. So this is the downtrend market. That means when it's a downtrend market, that means supply high than the demand.
Yes.
That means sellers effort high than the buyers effort. Sellers are powerful. That's why
Yes.
market falling down. Okay. So buyers again enter in the market. So these buyers enter in the market. There are different reasons. One reason is maybe it's the buyer's area. Number one, that's why buyers entered in the market. Number two, breakout may happen. Any support, that support breakout happen. After a breakout, buyers may enter in the market. It's just a pullback or it's just a retracement. Okay. So when
Yes.
this situation happen, this is a very strong situation by the seller side. Now buyers entered in the market. So we have to analyze this area, and we have to analyze this type of situation when we get any volume data that is very high. That is very high, like very high. That means not this type of normal volume amount. It's like 70, 90, 100, even more than 100 in this candlestick. So that means sellers already created pressure on these buyers. That's why the volume amount, not this type of, the volume amount, this type of. Because it's already one pressure previously. This is the pressure from the seller side. Buyers enter in the market, it doesn't mean that it will create this type of very strong movement to the upside, because we have to analyze the market structure and movement also. When this structure, this movement is a down movement, downtrend market structure, down movement, and this pressure by the strong seller side and buyers enter in the market, there are several reasons. There is a buyer's area, that's why entered. There is a breakout happen, that's why buyers enter as a pullback or as a retracement candlestick. Now we have to analyze in this candlestick. It may create one or two candlestick here to here. Okay, I'm drawing. Suppose this is a bullish candlestick now, and another bullish candlestick here. So now in this candlestick, volume little higher here. Okay, like this one as a 90 or 100. Okay. So that means if this candlestick volume exactly at this area or exactly at this area high by the buyer side, which bar this one? Tell me please.
This is push bar.
No, it's the stop bar. It's the
Stop
bullish
bar.
candle.
Yes, stop bar.
So stop bar. That means when we get this type of volume amount, when we see already sellers creating pressure in this candlestick. Otherwise, the volume.
It might be green volume.
Yes, it might be green or it might be red also. But
Okay.
when it's a green, suppose it's a green. So what our bar condition? When 4 parts, try to understand 4 parts. Always remember this one, 4 parts. Here to here, this part to this part. Tell me please. Name.
This is push bar.
Push bar. This part.
Push in direction.
Pushing in direction. When 50% breakout happen, then this bar.
Breakout.
Break bar and this bar here to here.
Stop bar.
So when it's by the buyer side or even by the seller side, it's a stop bar.
Yes.
In this bullish candlestick. So when we see this is a stop bar candle and it's a downtrend market, is it relevant?
No.
Definitely it's irrelevant because market falling down, sellers creating pressure. This is a pressure by the seller side. This is a downtrend market, buyer center in the market. Okay. When volume high in this part, that means push bar. So when push bar, more possibility market goes up.
Okay.
But after breakout, if this candlestick exactly close below any resistance level, that means seller's area.
Yes.
And volume is high at that area. That means it's a stop bar.
Okay.
So when this volume is high by the seller side, high, not this type of amount, this type of amount, high. So that means you have to think that sellers are creating pressure on this candlestick. It's a very weak candlestick, or maybe looking like a strong candlestick, but internal condition here, sellers are not strong. It's a stop bar signal.
Yes. But
So
if sir the volume is from green side and it is high, then also we'll have to consider that it is from the seller's end.
Yes, because when the direction of the trend, then it's a continue. I think I explained about this type of.
Yes.
The stop bar, that will also continue in this type of situation, but it's the opposite situation. Here buyers are powerful, but here sellers are powerful.
Yes.
So different market structure has different explanation. Okay.
Yes.
So try to rewatch the classes, then everything will very clear to you. Okay, so when it's a downtrend market condition and it's the pullback and this candlestick volume is exactly high, it may by the seller side or it may by the buyer side. Here, it's a stop bar. So when it's a stop bar and it's a resistance level seller's entry point area, that means
next candle red.
More possibility next candle red because of the when the POC here and there's the seller's entry point area. So when next candlestick open from here, it tried to goes up and got rejected and next candle fall down like this. So exchange effort, what do we mean by exchange effort? When we see this type of situation happen in this candlestick volume high, so sometimes you will not get this data each and every time that exactly in this candlestick above this part volume is high. It may from break bar also, it may we can get this data from a stop bar also or break bar also, or sometimes it's a pushing in direction also. But when volume is high, you have to observe that previous market condition. If the previous market condition is the downtrend market and it's a very strong movement by the seller side and it's the pullback, in this pullback area, in this candlestick, the power of control above for 75.
Yes.
Power of control amount above 75 or 75 or more than 75. That time you have to think that, okay, so it may change the effort.
Yes.
Exchange effort. Exchange effort terms applicable in this type of situation. So now if we see this, after this situation, market create another situation that is a bearish candlestick, and in between this area, it's a very important part. If you get this in this part, volume is high and that volume also high and more than 75, it's like 85 or 80 or like 90, more than 100 also. So high, that means the exchange effort already changed. That means the demand converted to supply again. Okay.
Yes.
So demand already converted to supply. Now we can expect next movement of the market to the downside.
Yes.
That's
what if, sir, this
yes,
this candle breaks this level and then creates the high volume above, and then this is another condition, na?
Yes, exactly. Another when breakout happen, try to remember always when breakout happen, definitely it's another condition. Volume is high, so that is the break bar, 50% chance.
Yes. Yes.
So market may goes up, next candlestick goes up, or because of this pressure, market may fall down also.
Okay.
But when we see this situation happen like that this candlestick close below any resistance level and volume is high, that time you have to think that the pressure already by the seller side and effort, that means this powerful situation here by the seller side, and already sellers creating pressure on this candlestick, so the effort change again.
Yes.
That's why it's called the exchange effort terms. So when that situation happen, and now we have to we can place our trade here also. So if we get another candlestick, that candlestick volume not only in this, it may pushing in direction of this part also, second part high, that means 70 more than 75 75 or more than 100. So then it's the perfect confirmation that market will again continue. So you can add all other concepts of the market. You can draw SNR level, you can draw only resistance level by trend line, you can draw SNR level by trend line, you can draw SNR level by horizontal line, you can search for any single candlestick pattern, you can search for any double candlestick pattern, you can search for any triple candlestick pattern. That will give you extra confirmation. But in Delta River, from Delta River data, you can take all these data. So from which part the volume is high and what type of, no, this is also high. There is a high volume, 50 volume here, but it's not so high like this, 75 or 85 or 90.
Yes.
In between all this volume, 50 is high, but it's not so high like 75, 90, more than 75. Okay, but here you already got the same situation. Number one is in this candlestick that already changed, the sellers already entered, and in this sellers the upper part, in this part volume high by the seller side. So that will give you a extra confirmation that already the exchange effort terms already applicable in this situation. So next movement of the market to the downside, and some trader, what they do, they place their trade for you can take 1 minute trade or market. After that situation, market continue. That means
Yes.
you can trade 3 minutes also. Okay. So
Yes.
you can take both one if this area. So some another tricks, this area is a early stage of the market, and this is a strong basement here. You already got a strong basement, then early stage of the market. After this pullback, if you observe any exchange effort terms, so then you can place 3 minutes 3 to 5 minutes also to the direction of the trend. Okay.
Yes.
So when the same situation happen exactly at the last stage of the market, try to understand. You already told that same situation. So now from that area, suppose there is a level. From that area, market creating this situation and breakout happen. And volume is high. Exactly at that part, volume is high. So don't think like that. It will give you exchange effort term here. Because already it's a first wave, market may create second wave, third wave, fourth wave, even fifth wave. After that, it sellers hit this buyers area, a strong buyers area. This area is a very strong area by the buyer side. It's the previous history of the market. So from that area, buyers already entered in the market, and now this in this part, a volume is high in this part. I think that is 100 volume. So now what happened? Market will continue. It will not reverse. More possibility. Market got rejected again from this POC point, and now market will continue. Like
Above around 60, 65, it is not that strong, no, sir? It
it's
must be
also
above 75.
it's if you see this is the 60, 65, so you will get that type of data in between this area. That means
Okay.
it will not help you to reverse the market. It will just continue.
Okay.
But it's also, you can, when you compare, there is this type of amount, there is no amount above 50%, above 75%. In between this area, you have to count, but it can break. Suppose in this candlestick, market came here, when next candlestick start creating. So maybe this candlestick break all these POC, all these here, and then market goes up, or even market may create another candlestick like this type of.
I have observed in many times these small volumes, whenever the small volumes has been created for bullish candle or bearish candle, the next candle reverses. I have
Yes,
observed and seen.
yes, exactly. That's the point here. That's the topics for today. Okay, so that's why
Yes.
I have given you just an idea in your previous session what's the POC, but which
Yes.
POC is very important, and when we have to apply all the strong POC, that is very important. Okay, so today
Yes.
this is now very clear to you, because when you see this type of situation, now in this candlestick POC is above this point, and for this candlestick, when next candlestick again buyers try to, suppose there is a gap, think that there is a gap, there is a gap here, it's a resistance level little above POC here. Okay, 100.
Yes.
When next candlestick start forming, buyers again enter here, so now it got rejected and market fall down. So now
Yes.
everything is okay for this situation. It's a stop bar, it's a downtrend market. Buyers again try to enter to fill up this gap, but when you see this is the POC, and it's a very strong, like more than 70%, 75. So then next candlestick got rejected, and most of the time after rejection, market fall down. Or even if a market create any bullish candlestick, it will not create a strong candle like this type of. It will close below your POC like this. you must win. You have to just place your trade exactly inside of this area to the downward direction. Sometimes it will give you very weak candlestick by the buyer side, and most of the time you will get this type of a strong candlestick by the seller side. After rejection, market again fall down, and after that side, that term, market will continue. It will not reverse. From this area it will not reverse, but you must follow the market stage, and you must follow the strong buyer's entry point area, and you must follow where is the level, and that level breakout happen or not, and after that breakout, what type of bar, this one break bar, stop bar, what type of bar. So if this type of situation happen, it may continue. So is it clear or not?
Yes, sir. Yes, sir.
Okay, now try to understand in the chart. Is it visible?
Yes.
So now try to understand. You can in your chart you can just create a settings here, like I'm showing you this point in this option. Okay, this option you can click here. After clicking, you will get this type of option. See, 75%, 100%, 75%, 100%. So
Yes.
in this part you will get 25%. There is a color like a blue color, red color, like this type of color. I am clicking. Okay, this type of color you will get. So just select the black one and okay, and then apply. Okay. Then it will remove the color, will remove. Then only it's shown when the volume is 70 and more than 75%, 75 or more than 75%. See the marking point 172, the marking point 203, the marking point 160. Okay, that is a very, very important point for you.
Yes.
So that's why you can set you can make this setting in your platform also. So now try to understand how you analyze this type of XNZ fault. So it's a downtrend market now. So this is the pullback area. See, this is the pullback area. So in this pullback area, when the last candlestick here, so although this is not 75, see, this is not 75, less than 75, but you have to take this one also as a POC. Yes. Although the amount is not more than 75. So what happened? Next candle got rejected from that area. After that, it create this candlestick volume is high exactly at the closing point. That means we bar this one, stop bar. This one by the buyer side, it's a stop bar, and this is the 84. Yes, the 84. Now when market again falling down, see, so previously the pressure from the seller side, and it's a downtrend market, and now market create another candlestick, volume is high exactly at the stop point, but because of downtrend market, this type of situation also continue the market to the same direction. Yes, same direction. If you place your trade after this candlestick here 3 minutes down, or from this candlestick, from this POC point 3 minutes down, definitely it will give you winning. Even 5 minutes also give you winning. So now see, this candlestick volume break bar, it's a 65, now it's a 71, and it's exactly at the push bar. This bar is a push bar exactly at the opening price. So now
Yes.
next movement of the market to the downside. It's the stop bar, again push bar, market fall down. Okay. So
Yes.
when this type of scenario you will get, that means exactly at that point in this pullback area, volume is high. Exactly this area. What do we mean by this area? This area is a SNR area or resistance area. This one, resistance or SNR, because this is now power of control. Although it's not so strong, but you have to take this one. So now after that, this candlestick close here, so you can trade here, or you can wait for another candlestick for your best observation, for your best analysis. So now what type of candle this one? If you take these two candlestick here, is it a dark cloud cover pattern?
Yes.
It's a downtrend market setup.
Yes.
Next candle down. So now this candlestick volume again high, exactly at that point. So next candlestick
Yes.
again fall down. So you will get each and every data from this delta river, but you can place your trade by analyzing the internal data, or you can add all other situations of the market. If you can add all other situations of the market, that will give you confidence.
Yes.
That
So
will give you some. Yes.
here it is 111 11 quantity, but still
Yes.
the candle is reversed.
Okay. Here in this area, try to understand. In this area, where is the SNR? Here. Try to understand. Here or not? Hello?
I can't see your cursor, sir.
Can't see. Now?
Now I can see.
So here, see, try to understand. 108, I think, this one.
Yes, yes.
POC, and the next candle goes up. Exactly at that point, this candlestick close.
Yes.
Now is it our SNR or is it our support point?
Yes, support.
Next candle goes up from that support point.
Yeah, I got it, sir.
Okay. So by this way, you have to analyze this and everything. So our today's topics was about the exchange report and
exchange
POC. So when
yes.
POC when high, more than 70%, 75. So then it's a very, very perfect POC. We can trust. But it doesn't mean that we will avoid this one. We will not avoid this one also. So see, try to understand. In this candlestick, this is one, I think it's 136. This one. See, buyers entered in the market very aggressively.
Yes.
But what happened? Because of this strong POC, reversed back and
yes,
bearish candle. It doesn't mean that this is not so important. It's also important, because in between this area, this is the only amount, high amount.
Yes.
When market exactly close here, then it stop here and volume is high. So that means when volume is high exactly at that part and it's a more than 75, so that is that meaning is it's the pressure, sellers creating pressure on this candlestick exactly at this SNR level or exactly at this POC point. So we can expect next candle down. And when we see in this candlestick here exactly at the opening price, or it's a push bar or pushing in direction, or even a stop bar, so that will continue the market to the same direction. Why? Because of this downtrend market. Okay.
Yes.
But if it's the uptrend market, suppose market is uptrend, okay, a market is uptrend, but when this same situation happen at the pullback area, it will not continue, it will reverse in this situation, same like this in the uptrend market. So you have to do your assignment in both downtrend market and both uptrend market situation. Based on this,
Yes.
today's POC and XNZ4 concepts. So this is
Yes.
all about today's session. Thanks for joining today's session.